Very good morning to you, Sudhir. So today, Sudhir is going to talk about what is happening in Silicon Valley. And I know Sudhir for a very long time. So we were actually batchmates at Stanford, one program we did together. So more than myself, Sudhir will be able to talk what he's done in the Silicon Valley for a very long time now. And Sudhir, over to you.
So yeah, Varad, thank you for the introduction, but I'll keep it brief. I'm a venture partner at FYDA Growth Partners. We look at frontier tech startups that are pushing the boundaries of technological capabilities and adoption. Okay, we focus on transforming early adoption into growth. Okay, so and this is where a lot of startups struggle, and our focus area is, how do we transition a startup from a growth stage into a scalable startup, into an enterprise startup. Some of our exits that I can talk about are in location apps, which we did in 2011, an exit in video streaming, in IoT platform. And the IoT platform exit was in 2017. And the last one was in cloud workload protection. This company was sold to McAfee in August of 2019. Our focus is largely on AR, VR, computer vision, IoT, robotics, genomics in area of health and wellness technology. Construction is the new area that I picked up now, teleoperations, and alternate foods. Because apart from helping startups, we also do scouting for some of the large conglomerates in Asia and try to find technologies that they should be adopting and they should be sponsoring. Okay, and we work with research organizations to be able to, validate some of the new concepts that are coming out in the market. So that's briefly about me. Varad.
Great. That's, I think it's a very brief summary of what you've done. Sudhir, you've done a lot more, as I know it. So now, today's panel discussion, as you know, is about how startups are taking up the challenge of what they're facing today, right? We've been having years of good growth. We're hearing a lot about unicorns from Silicon Valley, also from other countries. So from your perspective, what you see is the present scenario. How are these ecosystems, startups, investors coping to the situation?
As you know, everything has gone for a toss, right? And, this was like unexpected, came like a black swan event and nobody was prepared for it, But the good thing is, if you look at the markets right now, they are showing optimism in face of all the challenges, whether it's disease, economic impact, or whether there are communal riots in the country, racial riots rather in the US, or the storms that are happening in India right now. But, the markets are showing optimism. All the stock indices, particularly in the US, have surged. Okay, the Dow Jones is 40% up from its lowest in the pandemic 50 days. Okay, so economy seems to be reviving like a V curve, which was not what we expected. We thought it will be a stretched out U curve, but it is suddenly showing that there is a recovery, and because people are optimistic, the housing market is on the rise with low interest rates, but there is a long way to go. You can see the negatives. We have an unemployment of 15%, 40 million people are out of work right now. Okay, and even if the economy comes back to its new normal, not all 40 million are going to find a job there, right? So I think there about 25% of them will struggle. So I think the country will have to find, how to accommodate those people. There are a lot of bankruptcies. You must have heard of Hertz, the icon of rental cars. They filed for Chapter 11 in March. But what is happening over here is very interesting from another perspective. Okay, so this is generally the economic landscape. But if you look at the startup landscape, startup is a private equity market. Okay, so they are very different from the general stock markets that we see. So the good news is these markets are resilient. Okay, because startup cycles are longer. And there are new disruptive opportunities, or what we call as industry shifts that occur. The downside is obviously, you're going to have longer funding cycles, lower multiples, multi-stage tranches in funding. So that is what we are seeing. But the silver lining to the cloud is like what happened in 2008 and 2009. If you remember, that was the year where we created a whole lot of unicorns, right? the birth of unicorns started with the last recession, and companies like Uber, Airbnb, Square, Groupon, Slack, Cloudera, Dropbox, WhatsApp, they are all babies of this global financial crisis of that time. Okay, so from a US perspective, we see, yes, there is a challenge, but we also see that there is a huge opportunity because of three things. Okay, one is there are health and safety regulations that are being implemented, so that is constraining the mobility of people. Okay, and that is also driving behavioral changes. Okay, and there is economic impact because the spending is impacted. Okay, people are going to spend less, companies are going to spend less. Okay, and there is also time to reboot the economy, right? So all these things, three things put together, create opportunities. Okay, create opportunities. So where are the opportunities? Like, if you look at health and safety, new regulations that are coming in, social distancing, personal protective equipment, how do you track that? So there are computer vision opportunities, there are AR, VR opportunities right there, IoT opportunities. If you look at behavioral changes, is this accelerating some of the things which are not taking off? Like you look at grocery, online delivery of grocery is suddenly taken off, right? Which is never there, right? Earlier, I had never ordered grocery online, and this was the time that I had no choice but to do that, right? So, and this behavior, some of these behaviors will be cyclical, and some of them will stay with you for a long time. Okay, so that is where now the founders have to put their mind and try to understand how do we reap the benefits, of the changes that are occurring, and smart founders will do that. Smart founders will do that. So that is where we are as a state of the art right now.
Great, great. So, as you rightly said, right, there are a lot of challenges and opportunities as well. So, do you also see the existing startup? How are they going to survive this? Because we hear from a lot of investors that they are not going to make any new investments. They're only trying to put existing money into the portfolios that are already there, and they don't want to put money into new startups, right? So that's one challenge. Second is that how are these startups that are already running their let's say business at this point in time, how are they going to survive this period? What are your suggestions for that? How they have to, for example, repurpose?
Right, the right word you used, Varad. Okay, repurpose. That is the name of the game. Okay, but just like you remember, you and I had a discussion yesterday about camels and unicorns. Okay, so this is going to be a camel scenario, right? So you are not going to be able to sustain huge valleys of negative cash flows. You want to shorten them, and like camels, uh, take sustaining, trying to extending your until your next funding cycle. So those are the things that will come in. Okay, profitability will be a big thing for the VCs now when they look at it. So just growth without profitability will go nowhere. So path to profitability is something that people are going to look at. Okay, it is not just unit economics that will happen in perpetuity. No. Okay, there will be certain milestones, and people are not going to release money in one check. The money will be released in tranches. Okay, so they will see that, okay, is he able to deliver? Okay, is he really able to take advantage of the technology with this economy? Okay, and is he hitting the milestones? Then give him more and more money. Otherwise, they are not going to be putting all that money. So the interesting thing is, yes, like you rightly said, what is VC's first target? Their first target is obviously to look at their portfolio companies so that they don't die, because they've already burned some money there, right? So they will pick and choose, which are the companies that they should continue to fund, and which are the companies they should let die, right? And some of the portfolio companies will die, and some of the portfolio companies will continue. So coming to the early stage, there is going to be an ongoing investment in early stage. Okay, I'll tell you why. Because there is 150 billion of dry powder sitting with the VCs. This got to be deployed somewhere. Okay, although I can understand that the late stage deployments, late stage investments will go up. Okay, but if there is no early stage, there is no funnel for late stage for the VCs also. So they will have to do this, and they will have to look at the early stages. But they would do some analysis to find out, which are the right early stage companies for us, and so there are a lot of things that have happened recently. If you look at it from an economic framework, okay, we talk in terms of structural changes and cyclical changes. Okay, so structural changes are those, like, you have a trend, okay, which is on the rise. Okay, and there can be cyclical changes, there can be beliefs and what we call them, busts. Okay, so even when the trend is rising, there is suddenly a spurt and there is a trough, right? And that happens in the downward trend also. So if you look at that framework, there are some companies which are in structurally very positive as well as cyclically positive. Okay, those are the ones that absolutely there is no problem in getting funding. Okay, you can see a lot of e-commerce startups and particularly food delivery startups are getting funded right now. Okay, but this is not the funding that was there when there was euphoria. Okay, this is a very rational kind of funding. Okay, show me the money, show me the business, show me the profitability, and that's where I'm going to put the money. It's not that I'm going to write these checks and you keep blowing the money. So that's not going to happen. People are going to ask them to cut dead wood, to go leaner, and let that money last longer. But VCs are investing. The reason they are investing also, if you look at a VC who has just raised a fund before the downturn, okay, before the pandemic happened, okay, they are sitting with that money, and now they have an opportunity where they can invest the same money for more equity because the valuations have dropped, right? So they are absolutely going to take advantage of this market and try to do that. Okay, the other games people will play is obviously trying to find companies that are vulnerable. Okay, they have the technology, they have everything, nothing is going right for them, they're going to die, right? So they will pick them up. Okay, so they will pick them up either for technology or for the manpower, and try to use those companies to boost the offering or the value propositions of their existing portfolio companies. So these are very interesting times, and this is not a plain Jane game that VCs played earlier. You need VCs who are extremely smart, who have seen the dot-com bust, who have seen the 2008, and this is the third cycle that they will be able to survive that. So this is my view. Yeah.
Great, Sudhir. So you brought up a very important point. Now I think we'll see very soon a lot of ecosystems talking about camels, no
Right.
more unicorns.
Correct.
So the word camels are going to catch up very soon. So the one last question to you is about what is your suggestion for the Indian startups? Because you are seeing from Silicon Valley point of view what is going on there and what we can do for the Indian startup, what they should do now. Looking at India being the number 2 startup market in terms of potential, the ecosystem, etc. So what is your suggestion for them in terms of surviving this phase?
Yeah, so there is something very interesting happening right now across the globe, right? And a lot of economies are closing themselves. Okay, we had globalization. Okay, that globalization is going to get curbed down. Okay, a lot of patriotism is going to come up in the next few quarters. Okay, and people will say, be Indian, buy Indian, be American, buy American, and those kind of things are going to start. Okay, and so that is a tremendous opportunity. That is a tremendous opportunity. You see, look at what companies across the globe have done. Okay, they have built products at home and they have taken them globally. Okay, so there are a lot of opportunities where you can build startups in India and have a soft landing in various countries and give them the global benefit of expanding globally. And I think that's what they should look at. So first thing, obviously, success comes at home. Okay, if you can prove that you are doing very well in your own country, then take it abroad. I have a lot of startups that come to me from India and they say that, okay, we have this startup, we have built this particular product. I said, where have you sold this? Oh, we are doing 3 POCs in India. But that is No way you can soft land them in the US. You have to have a good set of marquee customers there, and then bring them over here. Now, one more piece of advice. If you look at the current scenario, the startups that are impacted, they are impacted in four ways, right? Some of them are positively impacted, like e-commerce, food delivery, online grocery. Some of them are mildly negatively impacted, like consumer goods. Consumer goods are going to come back, right? Education is going to come back. And there will be universities, there will be colleges, people will go there. So there is a slight setback right now. Slight setback for telecom also, right? But these are mildly negative. There are startups which are severely impacted, like oil and gas, construction, restaurants. Okay, they are severely impacted. And there are startups that are catastrophically impacted, like tourism, hospitality, cinema, and events. Okay, they will find it very, very hard to recover in the new economy. So there is a mantra that I will share with you, and what people impacted should do in these four different economies. So ones who are positively impacted, they should absolutely double down, ride the wave. It's a hockey stick story right now for them. Okay. Those who are mildly negatively impacted, they have to defend their position. Okay. They have to look at their approach. They have to look at new growth markets. Okay. And I think, a lot of startups, can look at new growth markets which are adjacent. This is like the blue ocean. You're slowly stretching from red ocean. You don't jump into blue ocean, but gradually start transitioning in that direction. Okay. The startups that are severely impacted, they have to absolutely pivot. And they have to pivot with a very, very innovative approach. They have to reinvent themselves, look at new business models and so on, and reposition them. Okay. Those that are catastrophically impacted, so they have to get into the mode of self-destruction, that I have to disrupt myself. Okay. You cannot be emotional that this is the startup, I nurtured for 4 years. How can I dump it? No, you have to self-disrupt, or you have to just abandon it and try to find something new. Use that remaining capital, and try to use it somewhere. If you know the story of Slack, right? They tried to do a game. The game did not succeed. They went to the VC to return the money. The VC said, don't return the money. You guys are good. Do something else. And so they did Slack, which is a hit, right? 23x exit for Axel. So there are opportunities. It is just a matter of, how your mind works and how you take these challenges. If you are afraid of the challenges, then you have a problem. But if you are ready to take the bull by the horns, then you will succeed.
Thank you so much, Sudhir. Wonderful talking to you as usual. So, we are just doing this event as a start. There are going to be more webinars that will come up, and we would like to create more engagement with the ecosystem. So what we're going to do is, anyway, this will be broadcast, recorded live at the event. And when we get questions, we will forward it to you so that you can answer it. Thank you once again. Have a nice day.
Thank you. Thank you.
Nice evening, by the way. It's a nice evening to you.
Thank you.
Thank you very much.